Good morning, everybody, and happy Monday. My name is Gareth Soloway here at verifiedinvesting.com. We're going to get into the technicals of the charts, trade setups for the day, what's moving, what's not. We'll go over gold, silver, oil, natural gas, as well as Bitcoin, and also obviously stocks in play today. So let's, before we get started, just take a little bit of a look here at what the S&P is doing on a pre-market basis. So what we have right here is pretty much standard as you would expect as what has happened lately. What do I mean by that? Well, we've seen lately where the markets, when they open at about 4 in the morning on the SPY, they open lower, right? So we see this lower open. They kind of trade sideways to lower for the first 30 minutes to an hour pre-market. And again, we're talking 4 in the morning Eastern time here, so when most people are sleeping. But then you see the float come in, gentle float to the upside, bringing the markets back to essentially flat to positive. This is where we closed last Friday when it was a half day, and you can see virtually flat on the day. Now, I've speculated that what's going on here is institutional money is seeing the markets down overnight and trying to float it up. It doesn't take a lot of their money to get the markets in pre-market back to the neutral side to make sure that they're luring in maximum dollars by the retail investor who has a lot of money still sitting on the sidelines in money market funds. All right, so again, the idea is watch for this. What have we seen lately? We've seen the markets opening higher or neutral, a sell-off for the first hour of the day, 1 hour of the day right here. And then once the institutions are done unloading their amount of equities that they're looking to do, the markets tend to then float back to the upside like that. So again, I'm not saying that that will happen today. What it's doing is I'm being very aware that the same kind of principles, the same sort of patterns are forming over and over again. And let's see if that happens today when the stock market opens. All right. So that's where we have on the intraday action of the S&P 500. Now, if we look at the S&P on the daily chart, there's this key trend line, and we've talked about it, right? We've talked about the 6,100 max upside target on the S&P 500. And again, what's so interesting about this is if you take this low, you connect it here, right through here, you kind of came into it right here, chopped and broke down, and then you hit it from the underbelly, 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 underbelly. Well, guess what? If we come right back up to that level, it would be around 610 on the SPY. That would equate to 6,100 on the S&P 500, right? So again, just interesting to note. Now, as a technician, would you expect this to be resistance, right? And the answer is yes, you would. Why? Well, because you use past history to give you probability that that's what would end up happening. So if every time we're coming up here and hitting it, we're getting a sell-off, 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 and sell-off, in the very least, you would anticipate something in that general sense. Now, it might be bigger, we don't know, but in the very least, you would assume it's higher, more extended. See prices higher, 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 higher. You would look and say, okay, well, in the very least, we'll get a pullback, maybe just a small pullback, but potentially tradable should the S&P get up to that level. And then the bigger question is, on my bigger macro analysis, I do have 6,100 as a major target on the S&P 500 that could lead to a much bigger correction in the markets. All right, let's get back into some of these other charts on the day. Just quickly browsing here to the NASDAQ 100. This is a very, very pivotal week, right? If we look at the NASDAQ 100, we tagged the high end here, which, by the way, this trend line goes all the way back to the 2021 bull market highs. So therefore, again, you would say, okay, well, it hit here and had a big sell-off. That was, by the way, the beginning of that July-August sell-off. We then got a small sell-off here. If we push up here, do we get another sell-off that's small, or does it become bigger? And we'll know based on this trend line. So if price on the QQQ NASDAQ 100 breaks this line and confirms, you would then expect a bigger correction that would probably rival the August sell-off here, matching out here. The other thing to note, you do have a small bear flag formation right here off of this down move. Again, we don't know if it'll play out, but that would give the probabilities favoring to the downside. All right, now let's just go back here real quick. Couple things. So number one, what we're thinking about here is understanding that this week the markets are now past the Thanksgiving holiday, the Thanksgiving holiday weekend. We're now back into mode of looking at economic data. This week it will be a big week. We have the JOLTS numbers on Tuesday, ADP private sector numbers on Wednesday, and the non-farm payrolls and unemployment number on Friday. So we do have some big economic data. There are some earnings this week as well, nothing major, not trillion-dollar companies, but we will have some big companies like CRM, Salesforce.com, reporting later this week as well. All right, in addition, we did hear over the weekend that Trump made some comments about the BRICS countries. If they decide to pursue a secondary currency for a reserve currency, he would then slap 100% tariffs on them. Interestingly enough, we saw the dollar gain traction, which makes sense, right? If you're pushing competition away, the dollar becomes more dominant. The dollar went up, and then we saw gold overnight slip to the downside. And again, that's classic price action with gold. The dollar strengthens, and we do see that movement to the downside in the gold. All right. Back to a couple movers and shakers today. Take a look at this. Marvell getting a little bit of a pop this morning. These aren't big movers, I want to be clear. Monday morning, we don't have a lot of earnings, so it's just basically relying on a little bit of news here and there. But you can see Marvell in the pre-market. This is the 10-minute chart. Nice little push up. We're kissing the underbelly of 100 even number. The one thing I'm seeing right here, folks, if we look at this, where would a potential level be for me? Well, really what we're going to do here is we're just going to kind of extend this line out, connecting this high pivot to high pivot. And this would be much more of a day trade, not a swing trade. But what we can see is this line is right about 100.25, maybe 150 or 100.5, I should say. So that might be day tradable today. It also looks like there could be a little bit of a parallel in here as well. So again, you could make a case that you have a little bit of a parallel. You could even argue that it extends further out, but that again lends credence to this being resistance right above the even number of 100. HIMS is also pushing up today. Again, this has been a very, very volatile stock. You can see, again, rallying sharply here this morning and yet on Friday after hours. And if we look at this, it's trading just below 34. You have a topping tail on the daily chart right here, right? And that high is right at 35. So that would be a double top right at a pierce of 35. That would be a shortable level potentially. And then the other thing we could also do is say, okay, if we zoom out on this and we want to look for a bigger high pivot, what about a parallel? Is there a parallel here that we can utilize? And just out of curiosity, I'm going to do this here. That one goes there, so we're above that. And you can even see right here, look at the pullback of the topping tail. Went right to that level, and then this bounce, and now we're pushing up above. So then we say, okay, well, is there a secondary parallel? And we can connect this low now and do it right through here. And this may give us that answer. We stretch it out right up to, let's say, right to this pivot right there. And this would then give us a bigger level. I would say this first level at 35 might be day trading, and then potentially a swing trade level at around 38.50 to 39 right up there. Low pivot, low pivot, low pivot, low pivot, high pivot, and this would be that reaching essentially of target. Another one here, Stellantis. Stellantis is under pressure here. Now, Stellantis, guys, their CEO resigned. He just said, I'm done, I'm resigning. It was abrupt. The market wasn't anticipating it. But what we do know is that Stellantis has suffered. They're the automakers that make Jeep. And again, they have been struggling mightily. The stock, in fact, down 50% just this year alone from the highs. Now, again, looking at the chart here, I do have a major technical level. Here right now we're trading at 12 and a quarter, right? $12.25. If we go to our daily chart and we zoom out, we can see that just down here at 1150, there's a major double bottom, pivot low to pivot low here from 2022. So 1150, give or take, there should be major support. Now we're still about 70 cents away from that, but if it were to flush into that, I would expect a technical bounce. All right. Let's move on here, guys. We have Bitcoin real quick here. Looking at Bitcoin as we go through, we have our bigger parallel. Now, again, it is pulling back. Bitcoin is pulling back a little bit this morning. In fact, I'll walk over to the big board and take a look here. But basically what we have on Bitcoin is it's still struggling below the even number of 100. There was a big options expiration on Friday going into Saturday, so that's been cleared away. That was a reason why the institutions might not have wanted it to break 100,000. But the one thing you can say here is just purely based on technical analysis, you favor a move higher still. Now you might say, well, why? Well, very simply, we have this shelf right here, right? So you have this line right here at around 91,000. As long as price is above that floor, right? If this is a floor, it's support. So as long as price stays above, even if price pulls back here, as long as it stays above, you favor a move still to 107,000. 107,000 is that big parallel. You can kind of see it at the top here. That would be approximately that level, 107 to 108. But the idea is that you want to just use the chart to your advantage. here's your technical support. As long as price does not close below this, or let alone confirm, then this favors upside, right? If you drop a ball and it hits the floor, it bounces. And that's the idea there about understanding support and resistance. Now, if it breaks this level right here, now you've broken through the floor, and there's this kind of air pocket here where price can actually trade all the way down to 75,000 to 74,000, right? There's not much support below. You can see it was pretty much a vertical move up until we kind of went sideways right here, creating that little floor area. So again, the overall conclusion or synopsis is that right now, even on weakness today, Bitcoin still favors a break of 100,000. And again, if it were to break 91 and confirm, then you start saying, okay, now that whole bull case is now wrecked at that point, and you start to look for that move to the downside. All right. Next up, let's take a look at a couple other charts here. Gold on the trading day, you can see gold was down sharply, and this is interesting on gold. You have to give credit to gold here. It was down sharply on those Trump comments about the BRICS countries and you know, saying, hey, if you mess around with the dollar and try to create an alternate reserve currency, we're going to come after you and essentially 100% tariffs. Notice how gold was trading lower, and it's now bounced back to the upside. Now, the one thing I will still say, guys, if we walk back to the big board on this and look at it right here, is that understanding technical analysis is key. So what is this pattern? Even with the bounce today, and you're still slightly negative on gold, but what is this pattern? You have a down move right here, right? We have a down move and that. That's a classic in spirit of bear flag. And so even with gold still moving back above after it violated the low end of that little flag pattern, you would still have a negative bias on gold. Okay, now again, how would it be negated? Well, if all of a sudden we were to close above the wide range red candle, then that negates the bearish setup on gold right now. Now, if gold does break lower, the short-term support is right back to here. You can see it worked right there. So as a technician, you would assume this would be support at around 2560 to 2550. If it breaks that, then you're talking about going below 2500. But again, we won't go to that extent yet. Obviously, I can update you guys via game plans and trading the closes. But again, I just want you guys to make sure you understand your pattern formations, right? Wide range red candle, inside bar pattern, that's bearish on gold in the short term. Remember, we're just talking literally out a few days to a week or so. So I'm not saying overall I'm bearish on gold. You guys know, if you've been following me, I'm still net very bullish on gold for the next couple years, 3 years, 5 years out. But shorter term, this is what's favored to the downside based on technical analysis, which again is probability analysis. Always remember that when you're looking at charts, it's all about analyzing past history, which tells us, again, this generally happens more often than not. It's probability data analysis. All right. Looking at silver, not much different here on silver. You're getting a little bit of a bounce on silver. It was selling off in the overnight. I do have these two parallel lines. So right now, this seems to be resistance. This seems to be support. If support breaks at around $29.85, you would then head to about $28 per ounce. And likewise, if you could get above and really get above this level at around $31.65, then you could actually trek back to that $35 level. All right, next up, let's take a look here at the U.S. oil trade, see what's going on there. And I'd love to give you guys more insights and say, wow, look at this crazy move in oil, and oil just remains so quiet. Now, again, as I always say, and I always like to just cover this since it is important, keep an eye on the $65 level support. If you break and confirm below that, you're then likely on a longer-term downtrend to $35 a barrel. Please understand, I said longer term, not overnight or not in a month. That would be probably in a 12-month move that we would head down there. You'd have plenty of bounces to trade, and I would be going long plenty of times in that zone on oil once it breaks 65 as it hits support. I'd also short resistance at that point as well. On the opposite side, if it goes up to 74 to 75 right here, that would be your resistance. If somehow it could break above 75, then you get some light to the upside. But otherwise, oil is capped here, and it makes sense. The U.S. is just producing left and right? We're just, to be honest, overproducing. You know, you'd have Trump in the White House, and he's definitely not going to do any sort of restrictions. If anything, alleviate a lot of any sort of, I would say bridges, or I should say blocks in the way for these drilling companies. And so it's really, produce, drill. And then the U.S. is just one component. You have all of Saudi Arabia and all of the other OPEC nations that are like, hey, listen, the U.S. is producing so much, why would we even cut back and hurt ourselves? Let's just produce and sell. Yes, it drives price down, but at least they're selling maximum amount of oil. Lastly, taking a look at natural gas today, guys, we can see natural gas is trading off of that high. It is getting a little bit of a bounce, but still down 5% on the day. You do have a little bit of support coming in around 305 right here. Notice your high pivot to high pivot to high pivot. So that is now support once we broke out. Retrace here. You probably would get a little bit of a bounce. I just don't have enough upside potential on that to make it worthwhile for me to go long. So instead, I'm going to patiently wait for a move down in this lower range to be a buyer. And then likewise, if we really broke out to the upside, this would be my first short level. There's a major gap fill around 440. So we made money on this a couple weeks ago. It was a great trade. We shorted right into here. It was perfect. The patience that I kind of showcased was a great example of how good traders are patient, and it worked out very, very quickly on that trade. And obviously now we're back in patience mode, sitting on the sidelines till the high probability setup comes and shows itself again. All right, guys, again, a little bit of a shorter game plan today because, again, Monday following a holiday weekend. But as always, folks, I'm here to go over the trades, the setups, the probabilities, the charts, the data. That's what verified investing is all about. So, again, leave the hype behind. Go to social media if you want that. Go to mainstream media if you want the narratives. I just want to give you guys what's the high probability scenario in any of these charts that we go over. Those are the levels. Doesn't mean it's going to happen. Doesn't mean it's going to play out. But it means it's most probably going to play out. All right, you guys have a great one. I'll see you later. Take care.